Hey, what's up, Algo traders? Welcome back to the Algo Traders Club. As promised, today is Sunday. It's about 5:30 p.m., so about 30 minutes before the futures markets open. And I figured that today is the best day for us to get started, right? So, as I was saying in the last video, I'm a really big advocate right now for trading oil and gas on chain because there's a huge opportunity, right? Because of how volatile the market is right now, it is like super exciting to trade these particular assets on chain. But today, I want to really explain, actually, I decided at 5:30 because I want to explain really one of the main differences between crypto and real world assets like oil and gas on chain. Even though they are all digital assets and they trade on chain, they are actually behave very differently, as a matter of fact. Okay, so today we're going to look at basically Brent oil, which is like really one of the kind of like the world like kind of a gauge for the oil price globally per se, right? But let's actually also make sure that we understand that there are a couple of oil actually like tickers out there actually, right? So let's talk about actually different kind of oils we have right now, or oil tickers. First of all, we have Brent oil, and Brent oil covers Africa, Middle East, and some other parts, I believe, right? Then we have WTI oil, or what's actually referred to West Texas oil, and this is like more like the price of oil. This covers more like the price of oil. Price of oil in the US. Okay. Then I believe we also have like Dubai oil, which kind of covers like of course, I think I say Dubai and then other parts of the Middle East. It's kind of confusing a little bit, I understand, but kind of stick with it. Just stick with me for a minute, okay? And then Middle East as well. So I think like these two are overlapping, but this just tell you basically there's different kind of oils. There's Brent oil, which is like more like the global price of oil. We got WTI oil, which kind of covers the US, which is like West Texas oil, and we got Dubai oil. And as a matter of fact, if we go to basically on Hyperliquid, if you go to HIP3, right, and let's say you type oil, right, you will see that we have, let's go to all of them. You will see that we have WTI oil, right, actually, and sometimes it's actually called CL as well, because the actually ticker on a trading view is CL, okay? So WTI actually here, and let's put here CL. Sometimes you will see CL, right? And actually, as a matter of fact, if you click on it right now, if you go to WTI, if you notice actually, oh, they did change the ticker. That's fine. But usually it's kind of confusing. Oh, actually, you can see it here. They still didn't change it here. If you look at here, right? It still says CLUSD. And I know it's kind of confusing, but always remember that WTI oil is ticker basically is CL. Okay? And then you also got, Brent oil. Let's put oil for all of them. Brent oil, US oil USDH, and actually soy USDH, but this is not really oil per se, but it's like soybeans basically, right? But we're not going to cover these two because they are actually kind of you need like USDH, which is like the Hyperliquid kind of stable coin right now, but we're not going to use that. So right now we are basically going to focus mainly on Brent oil and WTI oil, and today specifically we are going to focus on Brent oil because Brent oil is the global price of oil that actually interests us, okay? And that's the one we're going to start with, and the simplest one. All right, so what are we looking at here? What we're looking at basically is the price of oil, like I said in the last video, like with the price on the right and the time on the bottom. Right now, we're looking at the 3-minute kind of candle, right? So each one of these candles is 3 minutes. And you can see how the price of oil changes between, look at it here, from $101 to about like 99, but about $100. Well, there's $1 difference, but you also have to understand how actually it works on the pricing of oil based on ticks. Okay, so we're gonna have to learn also how in the future how ticks work, and or you can read about it, right? Ticks. So every single move on the price here is a tick, and every single tick is worth some kind of amount of money. So the money you lose or you make depends on the number of ticks times your leverage, if you have some, or just like times 1 if you don't have any leverage. Okay, normal, right? But if you want to make money fast, you can leverage go 20x. But if you want to lose money fast as well, then you can leverage as well and lose money just as fast as well. All right. So the idea is that overall, we want to understand how this stuff works, because I'm like, okay, well, for us to learn really, what are we going to basically automate? So today, let's basically trade by hand first today, right? And at the end of this session, I want to show you overall what kind of trading looks like per se. I'm not going to do it well today. I'm going to just show you like some of the basic steps or whatnot, right? But the idea is like you have to understand how trading works really fundamentally before you can understand really what it means to automate your trades. And if you haven't done so yet, I would really advise that you basically grab a book or a video about trading, and there's many of them basically online. You don't have to like really look at all the strategies, whatever, right? But you have to understand at the core, what is the gist behind trading? And what is the gist behind trading perps, or we call perps, or we call futures, right? Because we're basically speculating on the future price of oil. Okay? If I believe that the price of oil will go up, then I'm going to basically go long with the price of oil. I'm going to buy oil. If I believe that the price of buy oil at this particular price here, right? Let's say I buy oil at like let's say I buy oil at $100. Let's go here. I go on the bottom. If I buy oil here at $100, okay, and oil goes to like $101, obviously I'm going to make basically all these gains based on the rules of the game. Number of ticks, based on my position and based on my leverage. Okay, and we'll look at this stuff, every single one of these basically pieces of information in detail. All right, but what I want you to see right now is that every single one of these candles is basically 3 minutes, right? So you will need obviously about 20 candles. 20 candles will give you an hour. Okay, so maybe like 20 candles here is basically how did the price move within an hour? And every single candle again has a real body, or this thing, this green or this red, and the shadows or the wicks, right? Because when you call it a candle, the wick seems like the top of the candle, the one that you light on the candle. There's a wick here. And you also have, like sometimes we call it like the real body. So when you call it the real body, these things actually are called shadows. So depending on the context, you can call it either, again, shadows or wicks, all right? And we are going to basically play with these things in the future, understand actually why these things are dangerous, why they can liquidate you, and why they can also hit your stop loss. Okay? And what is the stop loss, you must ask? All right? So again, details again, right? So now we talked about ticks. We need to talk about stop losses. We need to talk about also take profits. Okay, and we're going to look at all of this stuff today, actually, just as an overall, to kind of understand actually more what is the gist behind trading. Okay, now when I come here, I look at this stuff, right? You look at this. Oil is ripping right now at 101, but there's a tricky thing here, and I mentioned it in the last video. The futures markets are closed on weekends until Sunday, 6 p.m. Eastern, and we're about 20 minutes before the actual futures markets opens. What does that mean actually? That means that actually the price that we see here, but since Friday 5 p.m. to now, this price actually is more of an oracle price and a kind of discovery price. But it's not really the real price of oil in the market per se, because obviously the futures markets are closed. How does this work? Then obviously we're going to also like go through some of this stuff and look at trade XYZ, okay? And trade XYZ actually is the HIP3. If I go here again, if I go to click here on Brent oil on top right to look at all these actually items. If I look at HIP3, right? If I look at HIP3, right? You will see actually these little things here: XYZ, FLX, VNTL, HYNA, KM, Cash, and Para. These actually are basically DEXs that basically integrate the HIP3 protocol, which allow them to basically talk to Hyperliquid. So all these three DEXs, Trade XYZ, Felix, Ventuals, I forgot this one actually, what is the name of it, right? All of these were right, Cash, and Para, is Para something, is it Paradex or Para something, right? All of these basically are HIP3 kind of a compatible, kind of a DEX per se, right? Or like a DEX, right? Because if you look at here, Trade XYZ is its own kind of a Hyperliquid clone, but all these trades happen on basically Hyperliquid. So Trade XYZ is just a UI for Hyperliquid, but they specialize specifically on, you know, commodities, indices, and so forth. Okay, so when you click on here as well, you can see here, right? So Trade XYZ, they have indices, ETFs, right? You can see it here, S&P 500, NASDAQ, the Korea 200, Japan 225, and this one, I'm not even sure what it is actually, right? XLE USDC, okay? They got stocks, right? You can do your typical stocks like Bird, Tesla, you know, MSTR, MicroStrategy, and all these kind of companies, right? Amazon, Microsoft, whatever, right? Uber, they are all here, okay? If you go to commodities, now we have like now oil, gas, silver, gold, copper, platinum, natural gas, palladium, all these basically commodities that are available are basically able to trade on chain today, as a matter of fact. But you see, they're pretty much separated by, they are separated again by, you know, category, right? Indices, stocks, commodities, FX, or IPOs. Things are coming up. I think like actually, whatchamacallit? OpenAI was actually here, I think, for a while. I'm not sure why they, or maybe it wasn't here. I'm not sure. Right? So this is basically Trade XYZ. So to go back to what I was saying, these things basically are open again, right? This price is not real actually right now. And that's the thing that's kind of tricky to actually understand. If you look at crypto, Bitcoin is available, Bitcoin, Ethereum, Solana, they're available 24 hours a day, 367, right? The price is pretty much the same. Of course, like real world events kind of like happen to, you know, affected the price of like crypto, like Bitcoin and Ethereum, whatever, right? But the price of these assets, like real world assets, like you know, oil and gas, they actually really are heavily influenced by the open hours of the futures market or the CME futures markets. And it's open again from Sunday 6 p.m. Eastern and they close on Friday 5 p.m. Eastern. So from Friday 5 p.m. Eastern to Sunday 6 p.m. Eastern, the price of oil is pretty much like a wild west. And you can see here that it pretty much like jumps all over the place depending on if Trump tweets, if Iran does something, if Israel does something, if Iran gets bombs, you can always see a spike here, right? It's at $100. If there was a news right now that actually the war might start today, the price will drop all the way down to probably like $60, even $70. So if you were long, and didn't have any stop loss, you most likely will get liquidated. Hence the power of actually a stop loss. Unless your trade already took the profit already, because you already had a take profit in there, right? And then you can basically, you might have exited the trade before the actual news got sent. But the idea is that you can basically open up a trade on oil here and leave it open for weeks. Because to you, the price of oil is going to go up from now to the end of the year, because this war seems like it's never going to stop. But we don't know. It's mostly speculating. Okay? So I come back here. I said, okay, I want to trade actually oil. How do I do so? Right? And we're just going to do something very, very simple here. Okay? So this is what I want to do. Just to kind of do an example. So oil is here. I look at this. It's like 3 minutes, right? This candle is like basically like the red candle, right? But you're going to see like this long wick here, right? And it's been rising up all the way here. And it went all the way, got actually there and got basically like rejected to this basically closing. And this candle also looks like red. But we're not going to worry about this candle because we always worry about basically a candle only after it's closed. But if the candle is still forming, we don't basically take a look at it. We're going to take a look at only the candles that have already formed, right? So the last one was at basically, what is this? 39, right? At 5:39 p.m. And it's at 5:44 p.m., right? And the next candle is here. You see it, right? Jumping around here. Which is actually really weird because this is like purely speculation that's actually making this move right now. And I want you to understand that. And it will actually affect exactly how you build your trading algos to trade oil and gas on chain. Because right now, that's actually what you should be trading. Okay? So I look at this here right now. I said, okay, well, this is actually looking like this might be probably going down because this candle, you know, the basically bears have like pushed the price down all the way, like, you know, the high of the candle was here, right? But the bears pushed it all the way down here, right? So looking at this candle, I'm like, okay, well, you know what? This looking like it probably will, you know, probably go down a little bit. I don't think it will go up again, you know, but just speculating, let's say, right? So how do I basically put a trade? So I come back here, I look at here on the right, and we're gonna look at all these details again, right? What is a market order? What is a limit order? Blah, 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 okay? But right now we're gonna just basically go market order, just to keep things simple, all right? So I want to short, let's say here, I'm confident I maybe short here, and maybe the price might come back down to 100 or something like that, right? but I'm not even sure. But let's actually go about it. So I can either buy, means I go long. I'm buying here, hoping that the price goes here. Then I close here and I make this profit, or I short here and hope the price will go here. And then if the price comes here, then I'll basically profit here as well. But if the price goes against me, then I'll basically lose out. So especially if again, I don't have a stop loss. Okay, and I'm not here to teach you how to trade, but the idea is like I want to show you overall really how basically the concept of actually trading kind of works. All right, so we want to basically place a trade here. How do we do so? We say, okay, well, I want to basically short. I'm very confident that the price will come down from here, right? We have like 2 consecutive candles, right? We have like all this basically the price running up. Let's say from here, even from here, from this low to here, then it got like rejected, right? Here it came all the way to here, then it got rejected here. Then this candle again is more like a spinner, which tells me that kind of like the trend might be actually changing, but I don't know yet, because this candle has not basically closed yet. But let's say right now, again, this is actually again we are talking about like basically 3-minute candles, right? But we don't have to wait till it close. Let's actually maybe like open an order. So now I want to sell. Let's say, right? I can maybe even slide the slider here all the way to the right. Let's say, or I can maybe put a number here. Let's say 25. Maybe I want to I got like I have basically $100 here USDC available for trade, right? And I can maybe go 50% of the $100, or maybe I can go maybe 100% of the $100. Okay, and then this will basically tell me the size of the size of the size of oil or the position I'm about to open here, Brent oil, right? So I'll go here. Let's say this one. I say, you know what? I want you to see the effect. So let's go 100%. I'm going to use all of it, right? And now I can basically either again take profit price right here, right? Take profit, right? TP price or stop loss price. Take profit or stop loss. I can maybe have them both, or maybe I can maybe say I want a stop loss, or maybe I'm like, okay, well, I want to go YOLO. I'm a Degen. I'm not going to use a stop loss or nothing like that, right? Which is very dangerous. So let's do it first without a stop loss, and we can do it second with a stop loss, so you can see what it looks like. All right. So now, if you see here, it says like not enough margin. It's because maybe the price has changed. And actually, I cannot maybe go 100%, but I can maybe go like 90%, 97%, and the button comes back again. But if I go 100%, sometimes it tells me if I wait too long, it'll be like, okay, well, you don't have enough margin, so I just got to move it down, maybe like couple of percent. Let's say I go 98% here, and I come back, right? Okay, so boom, I'm ready to place the order. When I place my order, you say, okay, I can maybe even click here and say, don't show me again. But for me, I really want to see one last confirmation before I place the order. My estimated liquidation is that if the price goes to basically 103, I'm basically screwed. I get liquidated, right? Estimated liquidation price. The size is basically 18 Brent oil, basically barrels, and it's a short. Okay, so let's go again. Let's place the order submitted. Boom. Now I'm here. All right. So if I go to my positions open positions. There it is. Brent oil, 20x leverage, which means all the way with 18 barrels like Brent oil, basically, right? So because I have like 20x leverage, but $100, so my position size is almost like $2,000 almost. And that's why it's so dangerous. I can make money fast, but I can lose money fast as well, right? My entry price is $101, and the market price right now is 107, which means that I'm basically, right? If you look at here, I'm negative because I'm hoping that the price of oil will go down. But right now, we are here, and it's not going down, right? So you see the green one here? You see the green, you see the green one, right? You see the green one right there, right? Let's blow it up. You see the green line, dotted line, right? That's the price, and this is actually our entry price. And if you look at here, it says minus 18 basically on the position size, and for the P&L, we are down basically 15 cents. Okay, I mean, not too bad, but we are still down, okay? But we don't want to be down more than that. Because if the price drops right now, if the price suddenly drops, we'll get liquidated. We automatically lose the $100. Okay? But the price seems like it's coming back down. We are down now. Look at this. We are down basically, 4 cents. Okay? But let's look at it here. Let's actually go back. And we look at again, our position is here, right? We are down 4 cents. And boom, we are positive now. We are up basically 15 cents. Because the price is finally coming down. Because I'm shorting here, right? I'm shorting here, right? So if the price goes down, we make money. If it goes up, we lose money. Okay? And if it go, the more down it goes, the more money we make. Okay? So let's look at it again here. Right? Entry price, market price, and then let me just minimize a little bit so we can see everything. And I can also like close the position here, right? I can basically go to close, market close, confirm here, boom, is closed. I can do limit as well, but today we're not talking about limit, we're talking about market orders. And I can basically close the position, right? But we don't want to close it right now because we are losing money. We only want to close if you are in the green. Or if we are really losing, actually, if I really like actually losing too much, then we can close it manually. Okay, so we are at 4 cents here, but let's see actually what happens, and maybe see if it goes green. Price went back up again, and we are maybe down a little bit more, right? The price is jumped up, but I highly doubt it's going to stay there. Right, it's very speculative right now. Okay, you see here, we are basically down 22 cents. And again, to show you again, if you come back to here, and you click on this green arrow here on the bottom, right, it will also give you this card, and you can play with it. It's actually nice. It's funny actually. You can always put these like little kind of like, you know what I'm saying, like memes in there, right? So we are basically down 2% on a short for 20x XYZ, right? And our enterprise is basically $101, but we are up 107, which means that actually we are losing money, obviously, because obviously this number needs to be lower than this number because we are going short. If you're going long, this number needs to be bigger than this number. And that's how you know, okay? But we don't want to close this right now because the position is still open, and we want to try to see exactly what we can. But in the meantime, also, like, let me also show you also, like, here, we can also, like, what we can do is that we can also put in a stop loss or a take profit price. We can set it up here as well now because it's not too late. Even if you forgot to basically set a stop loss or a take profit when you were opening a position, you can still do it after the fact. Okay, and I always like really suggest using a stop loss, 100% for sure. All right, but if we go back here, I said okay, we're down like maybe like 4 cents, right? And let's just play it by ear and say what should we do here? Okay, what should we do here, right? Maybe I'll say okay, well, you know what? I don't know if maybe like the price comes up to like maybe the high of this week, which is like what is it, 101.12. Let's say if it goes to like 101.13, maybe like let's put it like one tick above like the high of this one. Okay, so we can say okay, well, you know what, this is kind of looking kind of dangerous, so maybe get me out of here. If I can maybe like do a stop loss, right? SL price stop loss. Let's say my stop loss, I want to do it at what did I say again, 101.13, let's say. So I'm going to lose about 1% of my money, right? So if the price, if basically my stop loss gets hit, I will lose 1% of my money, which is not too bad. Okay, so the stop loss basically is really important because it pretty much gives you the gauge of the amount of money you are willing to lose in this particular trade. Okay, we're not going to set the take profit yet, right? But I'm going to set it back to the stop loss, go to confirm, boom, and it's confirmed. And now you can see here, I have a stop loss at 101.13, which is right here. Okay, right here, 101.13 is here. So if the price goes to 101.13, I can basically get stopped. I mean, which means that I lost enough, get me out of trade. Okay, if the price goes down, which means that actually I'm like, you know what, I made enough money, I want to take my profit too now. I don't want to basically for the price to go back up and I lose my gains. So what I can do also, I can basically set up my take profit as well. See, now actually stop loss is already set, so it's right here. You can also like cancel the stop loss and maybe change it if you want to, or you can maybe now you can only basically add actually the take profit price. So how much profit do we want? Okay, let's say we are here, and then we say, okay, you know what? All right. So if the price maybe come down to, let's say we're greedy, we say, okay, well, if the price comes down to all the way to this low, which is 100 and what is it? The low is like 100.21, right? Right? Like to this low here, maybe we should basically take our profit here. If it comes all the way down here, all the way to up here, we should take some profit. Okay? So let's do that again. We say boom, take profit. What is it? 100 and sorry, what was it again? That was 101. Let's say no, sorry, it was 100. No, I said 121. Sorry, 100.21. Okay, 16% again. All right, boom. We take our profit. It's right there. Okay, so our profit is here. All right, and this is actually what we expect. So basically, if the price comes all the way down here, we need to exit the trade, take our money because we are going short. Again, right, we are basically selling, hoping that the price will go down. See already right now. See how it is right now, right? It's already coming. Oh, there you go. See? Right? So if the price comes all the way down back here, then we're going to basically take our profit, depending on how much money we make. So now we have we have like basically entry point here, right? We entered at 101, once again, 101.6, whatever that was here, right? We basically have our stop loss at 101.13, and we have basically our take profit at like right here at 121, which is like the low of this week, this candle here at the bottom. And you can basically know what it is. You basically only put your mouse above this candle, and when you go up, these four numbers you can see here: open, high, low, close. Open, high, low, close. Okay, the low of the candle is this. When you put it here, you can see here this number changes as you move. You see, as you move the mouse around, this number changes on top. Okay, so you move the mouse around, right? So boom, 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 then you are there. All right. So now, what did I say again, right? Earlier, the price, I'm assuming that was going to go down. So we are basically up now $1.85. We just made $2 right now. We just made $2. We have 2%. Okay. So this is the entire game, basically. It's really as simple as that at the core. We want for our agent to start making $1 a day, $5 a day, $10 a day, $20 a day, $50 a day, $100 a day. If our agent makes $10 a day, it's making $300 a day. If our agent makes $100 a day, it's making $3,000 a month. Sorry, yes. If our agent is making $10 a day, it's making $300 a month. If our agent is making $100 a day, it's making $3,000 a month. So you can basically speculate, extrapolate, understand what is basically what we can do here. But also, if you're losing $100 a day, you are losing $3,000 a day. So I'm on story. Okay? So that's what I want to show you here, right? So here, we can put this here. Be like, boom, we're making some money. And we just made some money right now. Look at this. We up $6. We up 6%. How did I know this? Experience. And also, like, most likely also, like, honestly, it's not even like me being good or not. It's because we are on the right side of probability. The only reason why I took this trade is because I looked at basically this whole thing, and I said, hey, the price went from here to here, and it got basically like rejected by this candle here. And actually, this has a name actually in the candle formation, and we can talk about it later, right? Candlestick formation, right? But look at it again right now. We are up. Look, the price. We're taking an exit out here, right? But we are already up $6. We just made $6. Right? $6 we just made. $6. 6%. 6% of like $100 is basically $6 exactly. That's what we made. Okay? So what do we do here? Should we close the position? Maybe. Or should we wait until the basically price comes down here and actually will automatically, actually our position will automatically close as the price goes down here, comes down here. Right? And this is basically what trading is. We're just kind of speculating on the direction of the price. Okay? And this is actually very dangerous again because we are about 2 minutes from the market opening. So actually, let's basically close this. Let's essentially close this, take our money, right? Let's close it. Market close. Boom. Close. Boom. Go to trade history. Right? What is this? Go to trade history. Wait, why did it not show? Our balance went up, but where is my trade? That's really bizarre. Okay, but our balance is up $104, right? Because we saw in the beginning, we basically started at like $97, but we are at 104. But let's actually go. Now you can see this, right? How the price is moving. This is exactly 6 p.m. now. It's exactly 6 p.m. And that's why the price is moving like this. It's because now The blockchain is made in the real world. Now the markets are open now. So now finally the price of price of oil on the blockchain and the price of oil in this particular situation are finally coming together. Okay? Right? And this actually is very, very dangerous actually, as a matter of fact, because here that's how you get liquidated, because sometimes a lot of people don't know actually, right? But let's say we come here and they say, okay, well, you know what? We should maybe maybe long oil here for a minute, so I can show you. We start shorting again. We're at $104. Let's actually long here, right? We don't have enough cash. Boom. But let's just long. Okay. Let's just long here and see what happens. Okay. So we are long. Our position is open. We up 58 cents. So 6% right now. Okay. Well, let's keep going. 39 cents. We up 39 cents. But let's be careful. Let's basically put maybe like a stop loss here. Let's go for a take profit stop loss. And let's say if the price comes down to like maybe the low of this candle, 159, 100.59, we get out and take profit. We can leave it open for take profit for now. Okay. Boom. Okay, confirm order. And we have like our basically a stop loss here, right? So if the price comes down here, we want to be out of the game, because if the price comes here, lower here, most likely it's going to keep going down. But for now, let's just basically stop here. Okay, right? You see the price is going up. We up $3. Okay, we're going to look at the price here. We're going to look at the price here, right? We have $3. The price is going up because again, 6 p.m. happens, and I just wanted to see, actually, for you to see this. This is the anomaly that's happening on the blockchain right now, and this is exactly the anomaly that our agent can take advantage of. This is exactly what happens at 6 p.m. when the price of oil, basically in the markets, meets the price of oil on the blockchain itself. There's always this gap that happens, and there's always an opportunity to make money, I believe. Okay, and we up again. We up like $2 here. You can look at it here, or again, we go back down and look at on the bottom, the price here. We up $2, right? Okay, but now the price is actually like retracing. Okay, it's very close to our stop loss. So if the price comes here, then we can basically stop. But let's look at it again here, right? And let's pay attention to it for a little bit and see what happens. Okay, and this is again, remember, every single candle here is 3 minutes. Right? Every single candle here is 3 minutes. Okay? So this is just the open. Now let's look at it and see what happens. 603. Right. Let's see again here. We have maybe like still 34 cents. Okay. But let's see what happens. Price going up. We up again $1. We up $1. $3. Okay. We up $3 here. All right. We'll just see a little bit again. All right. And let me actually show you also like exactly now. Let's actually test like take profit. Let's say I want to take profit maybe at the high of this candle, which is like 101. What is this? The high of this candle is 101.61. Okay. Let's do that. Let's basically maybe like do a take profit. And we say, hey, you know what? We want to basically do a take profit. Take profit at 101.61. If it gets there, let's take our money and leave. Maybe like we up 6%. Okay, and then all of a sudden now you see now there's a candle. There's a basically this red line here, right? Let's say it's basically TP or take profit price at 101.61 at 20 barrels, whatever, right, of oil, right? So because to me the price already went up this high, it might hit it again, most likely, right? So if it hits it again, then we take our profit automatically and our position gets closed. If it comes back this low, we are willing to lose this much, and then we basically get out as well. Okay? It tells you exactly our stop loss price, our take profit price, and our P&L or profit and loss statement. Profit and loss, take profit, stop loss. Basically, all these terms we want to learn, right? Stop loss, take profit, and of course we will just learn P&L. Profit and loss statement. Profit and loss. Okay? What we have here, profit and loss, $1.51. So far, we already made $7. If we do it every day, we're about to make $300 a month. In some countries, in Thailand, you could pay rent with $300. And this shit is amazing. So no matter where you live in the world, if you have access to a Wi-Fi and to a laptop, you can trade oil and gas and energy and gold and all this stuff on chain today. Nothing is stopping you, man. No more gatekeeping with like, Wall Street and all that stuff, right? Everything is happening on chain permissionlessly. You don't need permission from anybody in the world. All you need is some tools, laptop, Wi-Fi, and some technical know-how, some knowledge. Nothing is stopping you. It might seem complicated, but you can see just how we did right now. Within an hour, we already went through this stuff. It's not complicated. It's not complicated. You're basically just like betting on the price of, basically, on an asset either going up or down. And you open a position based on that assumption. And your goal is to be, not to be actually right, I would say, but to be on the right side of probability. Because all of it is just a probability game. Nobody can tell you, once you open a position, it's out of your hands. You don't know if it's going to go up or down. I don't even know myself. I'm just speculating. There you go. Our take profit just happened, which is amazing. I just showed, let me say, this is like a beautiful, beautiful setup, man. But I don't understand why my stuff is not showing up here. What am I doing wrong? Am I trading it with the right wallet? I can see the open positions, but okay, let's go to WTW, or let's go here then. Oh, look at this. It's even more more obvious with trade XYZ. You see, but I can blow it up, unfortunately, right? This is what it looks like. But see this candle? That's a 6 p.m. candle. It happens every Sunday at 6 p.m. Every Sunday at 6 p.m. All the assets that are trading on chain have to basically sync up with the real world when the markets open at 6 p.m., when the futures markets open. And again, tomorrow morning at 9:30 a.m. when Wall Street opens, like Wall Street, like, Eastern time, right? Same thing happens as well, right? This is like huge jump that you basically need to basically account for. So there are like a lot of moving pieces, but it's not too complicated. But the idea is that you have to understand how this stuff works, man. And how the real world basically behaves on chain versus how crypto behaves on chain, because again, they are very, very different. All right, but let's look at trade history here. Let me see. I will connect to wallet and go to MetaMask. Actually, no. Let's go back to another. Go to the next agent. Yes. How come next agent is not? I don't understand. MetaMask. No, don't use last. What? Don't use that wallet. How come you won't let me? Okay, sorry about that. I have to like really figure this out because it's still like caching my old wallet, but it shouldn't use my old wallet. I don't understand why it's not using the. Can I change the wallet here? Oh no. Why is it telling me that? That's bizarre. But I need to like basically log in with another wallet actually so I can see the trade history because I'm not able to see it here. I'm not sure why it's happening actually right now and why I'm not seeing it here, the trade history. Yeah, that's really weird. All right. So here we are. This is where we are right now. Okay. So I'll figure this out, and the next time, by the time I do next video, we'll basically see what it is. But I should be able to see my trades in the history, right? But you see again, so we went long, but the price of oil is coming back down again here. You see this, right? Right? So we would have been in negative again, whatever, right? So it's good to basically set up a stop loss and a take profit, because you don't want to basically hit your profit target and then the price comes back down on you before you basically close the trade itself. And the agent should be able to do the same thing. And sometimes it doesn't. So how do I basically watch the trade itself, right? Make sure that my agent basically takes the profit. If it makes money, takes the profit. If it's losing money, cut the losses, get out of there. So you have to basically understand why it's important to understand how trading works, so you can communicate with your AI and the agent on how to build your agent from the ground up. But if you don't know small details and you're hoping that you're going to go and vibe code a trading agent, it's not going to work like that. You have to acquire the knowledge. All right, and this is actually what I wanted to show you today, and you saw it in the real time. What happens again at 6 p.m. when those two prices sync. And I want you to be able to basically take advantage of this kind of anomalies that happen on blockchains, because blockchains are very unique. Right? Let me say this again, right? I want you to be able to take advantage of these particular opportunities, because they happen on a weekly basis, on a daily basis, everywhere, man. But for us, the problem is that we don't have time to basically sit here in front of the charts and not be able to like be with our families, loved ones, be outside doing things, traveling, doing other stuff, right? And be glued to the markets. It's impossible. Otherwise, we're gonna have to be in the markets all the time. Like futures markets are open from basically 23 hours a day outside of weekends. They open Sunday through Friday, Sunday 6 p.m., Friday 5 p.m. Eastern, and they close again, right, until Sunday 6 p.m. It goes on to Monday, and Monday afternoon at 5 p.m., between 5 to 6 p.m., it only closes for 1 hour. Mondays, Tuesday, Wednesday, Thursday, and Thursdays. Yeah, that's it. Monday, Tuesday, Wednesday, Thursday. It closes basically for 1 hour between 5 p.m. to 6 p.m. And then on Friday, it's closed 5 p.m. until again Sunday, 6 p.m. So you have to understand about these intricacies. And it's basically actually details. And why it's important for your trading agent. All right? Simple as that, right? And what you see here basically is a S. Basically, we sold it here, we went short here, then we bought here. We basically exited here, right? Again, we bought here, then we exited here, which is amazing. We basically, two trades, we make money, which is actually unusual usually. It's actually unusual, man. You just like, I guess, you know what I'm saying? But again, we just want to be on the right side of probability. That's really what it is. We want to be on the right side of probability. That's it. You don't want to trying to be gurus and this and that, whatever. We don't know anything. We don't have any control over the market. The market is here to take your money. Something to understand actually, right? The market is here to take your money. It is not here to give you money. So the faster basically you can like detach yourself from the emotion of like winning or losing, because it's all the same. You should feel the same whether or not you lose or win, right? And not get in this like really like, how do you say, euphoria of winning, or like really being down for losing. And nobody likes to lose. But in trading, you have to understand that losing is just part of it. You're going to lose most likely. It's because it's probability. But what we want to do is like basically increase our chances of winning, or our probability of winning, which is actually what we call again last time in the last video, if you remember, it was called, right, increase our win rate. That's it, right? You want to basically maybe we want to basically win 7 out of 10 trades, lose 3, win 7, something like that, right? 70% basically, 70% basically win rate, right? Or you can be like you know, the gangster Jim Simons, 5.1, still be a billionaire. His win ratio is below 5.1%. I think it's like 5.075% their win rate, but they still make billions of dollars. And we're gonna have to like really dig into that math and what it really means actually, to have like a large like sample size of trades with a small edge but still make money. But you have to have money to do that. Okay, so that's the idea, right? So today we saw stop losses, take profits, P&Ls, win rates, and that's really how this stuff actually works. Because what happens again, what I said last time, is that what you need to do is basically like understand the lingo, the vocabulary, right? All these terms like Brent oil, WTI, Dubai oil, whatever, stop loss, take profit, P&L, It sounds like Chinese at the beginning. It sounds very complicated. Well, once you learn it, you learn it. It's just language. Like you like trying to learn Spanish or something. It's lingo. I mean, not Spanish. It's not like learning a full blown language, but you have to learn the lingo, the wording, the vernacular, the jargon, all that stuff. You got to basically understand all that stuff. And once you learn that, then you know it, right? Then you can communicate with your LLM. If you're using Claude, if you're using, you know, Cursor and all that stuff, whatever, right? You communicate with LLM, so you can communicate with your LLM in terms of trading, because you want to understand what your LLM is telling you. If you don't understand your LLM telling you, how do you fix the problem? How do you improve your trading agent? How do you improve your win rate on all that stuff, right? How do you improve it? right? You don't even know actually what is entailed or what's happening or whatnot, right? So this is actually what I want you to do, right? I want you to basically like start trading by hand. Go to Hyperliquid, right? Go to Hyperliquid. Just you don't know how to trade oil basically, right? You can just basically like just come on Hyperliquid here and just like go to oil here, right? And like maybe trade BTC. Trade BTC, man. There it is. See BTC how it's jumping right now? It's up to like 78. What the hell? Something just happened right now. It just went, see? From 6 p.m. right now, it just went from basically 77 something to 78. If you went long here and went up there, then if your agent went long here and like you really closed the position up there, it would have made some money. But why? If you look at this ranging, why would you open a position here? You are gambling basically. Unless actually it's like we look at the 15-minute candles. Let's see what it looks like. 15-minute candles, right? No, it makes more sense. Right? We look at here. Again, every candle here is actually 15 minutes. Okay? So if you basically open a position here, imagine here at 77 something, and you close it there, you probably made a lot of money. If you were on the right side of probability. Right? But it's easy to look at the graph right now in hindsight, be like, okay, well, if I went long here or went long there, I would have made all this money from here to there. 20x leverage. Actually, no, wait a minute. Bitcoin is 40x leverage. Actually, Bitcoin is 40x. You can lose your money just as fast. You know what I mean? So the idea is like, what I want you to do is that from going forward is that you basically take $100. And I'm not, this is not financial advice, right? But you have to understand what it is to have skin in the game. Like start trading, because the smallest what you can do right now on basically on Hyperliquid, I believe it's like $10. The nominal money you can put in there. You can put 10 USDC, right? No, sorry, that's a right. We can our size. Let's say we want to maybe like, let's say you put $100 and you're going to put maybe like 10%, like 10% of your size. 10% of $10 is about like $100 is about $10, right? You come in here, boom, 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 place order, right? $10, right? But let's say we want a $10 BTC, right? Let's say you want to just go DGen, BTC, 40x leverage. Okay, confirm. Boom. So now we can go 10%, 5% of our thing, with a 10%. Let's say we go 10% of our purse, which is $10, right? Take profit. Let's say we're going to do a stop loss at like maybe, I don't know, stop loss. Let's say 77.8 right here, right? If it goes to like 77,800, get me out of there. Right, but I want to go long. Boom, I place my order. Bam. It's right there, $10. The notional actually also like something very important in trading, something called notional value. Notional actually is like the minimal basically you can put to open the trade. Notional value, and for Hyperliquid, I believe it's about 10 USDC. 10 USDC. I think on Astra it's like $5 actually. On Astra is a bit cheaper. Astra is like $5, 5 USDC. You can open a position. It's going to call a notional value. It's another term again, right? Again, I'll put all this stuff in document. Don't even worry about it. Today is just so you can get an idea of like really what this is actually, right? Because if you think about it, the Algo Traders Club, actually, let's say Algo Traders is 2 words, right? It's algo, algorithms, and trader. So you have to be good at trading and also be good at basically algorithms. If you want to be an algo trader or a quant, okay, you need to be good at like algorithms and basically trading. And the only way to understand, get better at trading is to basically trade by hand first initially. So you understand the whole mechanism and actually why you want to write an agent to basically help you trade, because you understand that in this particular situation, right, there's a lot of emotions involved. There's a lot of emotions, man. And also like, how do you open the trade? Like, how do you know? We don't have here any indicators right now. We just open up a trade. There's nothing. We're just using like naked charts right now. Open up a trade. We're making money still, but I don't want you to believe that this is like the normal. This is just like kind of chance per se. I kind of know what I'm doing, but it's like still chance and probability. Now, right now we are up like 29 cents. So we have like 3 winning trades right now. We've had like 3 winning trades, man. This is crazy. Open orders, right? Positions right now, right? We got BTC 40x, right? Our position, our entry is like 78,000. Market price is like the market price right now, the current price right now, right? And we are up basically we are up basically 34 cents right now, or 3.1%. We are up, right? So we got to go there. Boom. You could download, copy it, share it with your friends, and make some money. But also make sure you share it also when you lose money. You know what I mean? So people know exactly what's happening, man, right? So this idea, right? We up 3%. That's not bad. That's not bad. We have 3% on $10, but leverage at 40x. So right now we actually using it based about we actually like $400 in USDC position size, $400 in USDC, right? 10 times 40, or like 10 plus whatever, 10% of our purse. We had, right? Okay. So the idea is that this stuff is not complicated, but you have to understand how it works for you to be able to basically put that knowledge into an agent. So the more you trade by hand, the more you actually get ideas and get like strategies and stuff like that, right? You know, so I'm not saying like put everything towards the agents right away, but in the beginning, it's going to be like a combination, a symbiosis between man and machine, between yourself, the trader, the operator, and the basically agent. And you want to have to guide it into like really making better trades. And the more experience you have, the better it is. Because again, we don't want, again, what I said before, we don't want to spend all of our lives in front of these charts, looking at these charts and trying to be traders or whatnot, right? It's too complicated. It's way too complicated. All right? It's way too complicated, man. So what we want to do is like, we want to automate. Always automate whatever you can automate. And especially if you can automate making money. Okay? So we want to basically increase our chances of making profitable trades. Or we want to increase the chances of our agent making profitable trades. We want to increase the probability of our agent making profitable trades. And it's simple as that. Open a position, close a position. Where is it going to open a position? When is it going to open it? When is it going to basically exit a position? And when is it going to re-enter a position again? And it's a constant loop. Open a position, close a position. Open a position, close a position. Open multiple positions, close multiple positions. But in the beginning, I would say that like maybe let your agent only have maybe one, in the beginning, until you get used to it, your agent should only open one position. Have one position active. Like right now, right? We have one again on BTC. We have like 43 cents. 3%. We have. So you're gonna have to basically like really work in symbiosis with your agent to understand when to open a position, when to close a position, right? Your agent should have all this information detailed, right? And all the data coming from Hyperliquid. And if you can't get the data yourself, Next Wave can help you. And that's what I'm doing right now, right? And that's also why I'm building like Next Wave, right? Because it's a lot of the data to crunch, and sometimes you don't have the capability or the power to basically crunch all this data. So Next Wave does it for you. It takes all this fucking data from Hyperliquid and basically condense it into like a single signal, a single decision, actually. We take all this data and we make one decision from it to either short or long a particular asset. Okay? But that's the future. Right now, we want to get you from 0 to 1. From 0 to your agent trading and making his first $1. Same as we just did right now. Right? We down already 7 cents. We didn't even close it when we were close to $1. We should have closed that. You know what I mean? But then again, we don't have a take profit, so it's gonna keep ripping to infinity. Actually, not to infinity really, because there's another thing that actually we gotta talk about later when Hyperliquid does like a forced liquidation. If you have like a max leverage or whatever it's called, but you don't have to worry about that. Okay? Or we basically hit our stop loss, but we don't have a stop loss right now. Did we have? Oh yeah, sorry, we did have a stop loss like right at the bottom here. We said, okay, well, if it comes here, we can take a stop loss here. Actually, this thing also you can also move it as well. You can move it, right? You can say, okay, well, you know what? I want to maybe like leave it my stop loss. I'll leave it here, right? Or maybe I'm like, okay, well, I don't want to lose as much money. Maybe if it comes all the way down to like, let's say at the bottom of this candle, get me out of there. So you can just basically just move it around. That's it, right? Stop loss and take profit as well. Okay. Here. And you can also even add like a second. If you are like paranoid, and you know that sometimes like this wicks can go like poop poop poop, whatever, you can just maybe even add like a second stop loss, right? If you want, right? So you can even double them up. This one is at basically what is it? 78. Let's say we go this one. We put it at 78.4, right? 78. Let's say 78.4 right there, right? we're gonna maybe have like a second one. See, it's modified right now. Okay, second solar right there. Maybe we can have another one here at like maybe like 77.8. Let's say, right? I can put another stop. Actually, let's actually put it here. I think you can put it. Actually, modify the order here. You can modify the order. Actually, that stop loss is for the new order. This one is like for the modified order. So we can put 78, 77.8, or whatever. Right? Is it 77.8? Loss. That's like 41%. That's kind of a lot. Let's say we go 77. Sorry, 77.9. Right, 36%. All right. Or we can go 78. Be like, hey man, 78. That's a lot, man. 31%, right? So if it gets to 30%, we can get it. Okay. So let's actually put it here. Sorry, upward boom. Right. So look at it now. Now we have two. Now we have like now two like stop losses now, and we can basically like layer them up right now in case like the wick comes so fast it misses the first one. Then we want to get the second one for sure. You know what I'm saying? So we can have like two stop losses here and like level them up right here. Boom. Okay. Or we can just close them up. Just click on it. Cancel. Yep. Click to cancel. Click the X. Cancel it. So now we don't have any more stop losses now. If the price comes down, we might get liquidated, right? We're already down like 4 cents. So we were up like 43 cents. Now we're down like 4 cents. All right. Now we up again. We up for whatever, right? But let's close this up. Just to make sure. We can just like close. Confirm close all. Boom. We're done. Okay. I am still so confused why my trade history, something is happening, man. I'm not sure exactly what it is, but we'll figure that out later. No worries. Okay. Because we don't see our trades here. And I have my positions, and why can't I see my trade history? I don't understand. I don't understand why we don't see no trade history here. All right, so this one we made, this one was like, no, actually this one was an agent, it wasn't even me. All right. So this is what I want to show you today. Before basically actually we start like coding up stuff, right? Before we basically start coding stuff up, we have to understand what trading is. That's really what it is. So today was like a kind of like a short, compact kind of thing for you to understand, you know, what it is, right? But we'll go again over the details. You can ask me questions during our weekly calls or whatnot, right? Ask me questions and stuff like that. And we can go over the details again, right? On how to basically like best do this, right? How do you learn basic trading? And I'm telling you right now, the only way to learn how to trade is to trade. There's nothing else. You can watch no videos, all that stuff. It's not going to basically help you trade. You have to basically have skin in the game. That's why I'm saying, like, okay, well, this is not financial advice or legal advice. Take about $100, go to Hyperliquid, right? Make sure you basically come here and, you know, connect your wallet. Let me disconnect my wallet, right? It's gone right now. So you can see my, there's no open orders, positions, or trade history here. It's 0, right? Nothing. I go to connect, go to MetaMask, right? Next agent, connect, right? Boom, it connects me. I come back here, right? I go to trade history, boom, and you can see here, okay? I'm basically down again. I can see my money to $110 or whatnot, right? You can basically deposit when you have, if you don't have money here, it will tell you exactly how much is available, or you can click on deposit, right? And deposit whatever basically USDC you have. You can hit max. On Arbitrum, you can deposit on Arbitrum, on whatever, Hyper EVM, blah, 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 whatever, right? Deposit here, boom, 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 press deposit, and the money, you take a few minutes for it to basically write it to the blockchain, and your money will show up here. See portfolio value, or you can see actually also here, available to trade, $110. So while we're sitting here, we already made about $13, which is amazing, right? But it's not that fast, it's not that easy. Again, right, I have a lot of experience. I kind of know, like, you know, the direction of the price sometimes. And I'm just like, you know, I was lucky, I guess, you know. Again, I was just on the right side of probability. But none of us know about where the price is going to go. Nobody can tell you, man. Nobody can ever tell you where the price is going. Otherwise, some people will be like hella rich basically by now, right? So the idea is that, like, we want to be on the right side of probability. So as you can imagine, we'll basically start to study as much probability as we can without getting like too deep into the math of things or whatnot, right? But we need to understand probability. Maybe actually you should play poker on your free time. You know what I'm saying? Learn how to play poker, man, all that stuff, whatever. You know, that'd be good, man. So anyway, I'll leave you here, like right now. I think this is good enough actually for today, for like Sunday. You know, I told you like last time for Sunday, 5 p.m. or something, because I wanted to show you exactly this is what happens at 6 p.m. exactly when the market turns. You saw the candle going like that, kind of going crazy. You know, nothing fake here. Everything was like in real time, right? So now this week, we're basically gonna have to like really go through the steps now on how to basically, where we're gonna deploy our agent, how we're gonna build it, how we're gonna basically go from scratch, because initially I made an agent that I wanted to showcase basically you guys can use from day one. But I'm like, you know, this is a bad idea. I basically wanna walk you through how I go through like building agents from zero, from the ground up, basically, from no agent to an agent. And then from there, we'll start getting trading. And then from there, we'll basically initiate and try to like really understand how to basically write the right agent for deploy for production that will trade for us 24 hours a day on a server somewhere. Right? But we got to go step by steps, man. It's not hard. It's not easy either. Right? But everything that's actually challenging is rewarding in the end if you can figure it out. If I can do it, anybody can do it. I'm nothing special. Right? But the idea is we want to automate the entire process we just did right now. Because you see like what it takes like to make a decision, how to open a position, where to open it, where to close it, blah, blah, blah. We don't want to think about none of that stuff. We want to give it all to the agent to do for us. And that's the idea behind the Algo Traders Club. We want to be the best like agent operators in the world to operate, operators in the world who operate on autonomous trading agents, and specifically for Hyperliquid. And right now they basically have HIP3, which is like actually like a real world assets. They're going to have HIP4 recently, HIP4, HIP4, right? It's going to come, and they will basically have, again, it will come soon. Soon you will see HIP3, HIP4, and HIP4 basically is going to be for like a prediction markets, like a poly market. So very, very soon, Hyperliquid is going to compete against poly market. And it's going to be very exciting. It's going to be very, very exciting, man, because the same agent we have that's making basically trading oil and gas, whatever, it can also like make also like predictions as well. Why not? Okay, so I'll leave you here again, right? I'm just imploring you, once you finish this video, to go start trading, right? Or learn how to trade, like do it, just like do it like a small steps, man, one by one. Just learn, like trade BTC, ETH, Solana, whatever you like, or even oil if you like, right? But be careful again, like I said, real world assets behave different than like crypto. So if you trade them by hand, be very, very careful. But crypto, you can be more flexible because it's not really like, they don't work like RWAs. All right. So I'll leave you out here. Hopefully have like a good end of your weekend. And I'll see you this week. Again, our calls are going to be every Wednesday at about, I think, 6 p.m. or 7 p.m. Eastern on Wednesdays. And I'm here to basically answer you, or like a Q&A, answer all your questions, do some demos to help you like figure out your application and whatnot, whatever, right? But I'll see you this week, and I'll also most likely see you on Wednesday during the call. Okay? Hope you guys have a good rest of your weekend, and have a good week as well. All right. Ciao, ciao.